Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 4th of August here in 2022. And we have some earnings and the jobs report to talk about in addition to today's range day in the equity market. Not a whole lot changing. The market closed where it opened, and that was about the 41.51 level. In the Nasdaq, just about that 13,003. Nasdaq was the strongest of today's indexes. Dow and Russell, they were down, but they are continuing to be in their key level. And for the S&P, we'll start there. In the S&P, we're still watching this 4150, 4200, even as high as Don's gravity point, 4211. That's a spot where we're going to say this far, but no much further. And if that does start to break and go up, again, we'll have a little, call it alternate thesis or risk profile to here. And that's just going to be the break to about 4330 on the upside. We'll call that the risk. But everything else will be called the reward. And reward is going to be for the downtrend in motion to continue, anything about recession, and of course, bear market. Nonetheless, that is going to be the this much, but no further. And anything above that would generate additional buy orders to hedge, to limit stops, and to play a little more protective in the equity market. Just talking about the S&P. Jobs report will come tomorrow. Tomorrow morning, we'll talk about that just in a moment. But the key level in the Nasdaq is roughly this 13,500. So what you might want to do in the charts, if you are not a big chart watcher, this level is going to be important for a lot of reasons. That it's roughly speaking, about the middle of this 2022, and the opening high, that's January, that's the high of the year for the Nasdaq, and the low was down into June, that was about 1100. So not quite the halfway point, but still going to be a reference point. And that it's a halfway back, or at least a stellar rally. Again, we're putting this in context of the bear market rally in March into April, and that was a decent rally, a very good rally, stronger than expected rally. But I'd say the same about this. It is a stronger than expected, even more than I expected in terms of where we are above the 13,000 level in the Nasdaq. Now that's going to be true if we discuss the XLK. Remember that the Nasdaq peaked or topped in 2021. Just to highlight that from a moment ago, the Nasdaq shares, or at least the index itself, its high was just shy of that 17,000 level, and since then the market's been in a downtrend. Same is true with the ETF, which would be the XLK. That most closely tracks the technology sector and that key focal point price level for positions, for spreads, and the like would be just under the 150 per share level. Again, opening high 2022 is about the 175, and the low of the year is about 125, making the midpoint. Midpoints are always important when it thinks about distributions of profiles. That's about the 150 per share level. We always keep a focus on the financials, and they're weaker. This did not, in terms of the big picture or big play, have a stellar rally. It's a decent rally, but compare, contrast. The most recent, earlier March into April, call that bear market rally, that was about 10% just on the ETF. And then from this second one was about 9.5%. Again, looking for that swing on the way up. And on this particular rally, if we count this here or there, it's about 8.5 or 9%. If we actually get a little more precise, there is that 10% rally. So these swings, we'll call them counter trend or bear market rallies, have been on the neighborhood of about 10%. And that's where we are given the start of August. So 10%, 10%, 10%. Will this lead to a decline? That's what the odds would favor. That's what the trend would favor. And if we are continuing to go into or already in a recession and bear market, that would be the trajectory of price into the future, or at least we'll frame that in terms of probability. The reward is going to be to the downside if you have to make a decision, if you're not already positioned or hedged or in positions that you're managing. It'd be a little bit too late, or long in the tooth, as we might say, to start getting long or bullish when the market has rallied 10%. That would not be a good decision if you want to do something to jump into the market and jump long after a 10% rally. Not a good risk reward, not a prediction, but not a good risk reward play. The same would be true in general for other ETFs, and that's what we'll focus on, just these main leading ETFs. And take a look at the percent rallies on that. 17%, this is the consumer discretionary, XLY. And the most recent rally, now that's about 25%. Again, taking a look at the bear market or the strong rallies against the prevailing trend. And that prevailing trend is down, and from the high to the low, that's about a 40% decline. So that's the framework, at least I want to discuss in the video. Similar in industrials and materials, but the one that's off or different is the energy sector. And that again is tied to crude oil, which itself is making new lows not seen since February, earlier in the year. Mentioned in Tuesday's video that if you are looking for the market to cheer on or cheering on a cool off or cool down in inflation, this is the type of thing that you'd exactly want to see. It's that crude oil, just as a proxy, has traded from 120 down to 88. And that is a 25% haircut for crude oil. That is translating to prices across the country in terms of what we're paying at the gas pump or to fuel the cars and everything else. Transportation, summertime gas transportation. It's actually a good thing to see the oil and the gas prices come down. But that could be a bullish sign for the equity market because the main focus continues to be inflation, the Fed's reaction and raising rates to that inflation, and how much damage inflation has done to the consumer, to the jobs, and the broader economy. Now that will take us right into tomorrow's jobs report, or the unemployment, call it non-farm payrolls, or the unemployment rate, or the employment rate. And of course, how many jobs were created or lost in the economy? Just to get a sense of what the number could be, we'll look at this employment situation. This is again from the Market Watch tab here in Thinkorswim. And just pulling up Friday's session, what are consumer or consensus estimates? Roughly speaking, the estimates are for an increase in jobs. I'd say anywhere from 250,000 to about 350, maybe 350,000 would be added. And the expectation for the unemployment rate would be 3.6, maybe 3.7%. And we can always delve a little bit deeper when the numbers are released, and they will be released 1 hour before the market opens. We can see exactly into manufacturing, average earnings, and everything else, work week, and other important information for the economy, the worker. And if we're going to see layoffs, we're already seeing some major companies do that. Will this translate into the broader number? That is what we'll be watching in Friday's session. It will happen again pre-market, and that can set a stage for either a breakout short squeeze continuation of the rally, and rally or ruse. Rally it is at the moment. Ruse it will be when it turns and goes the other way. But the jobs report could be a major catalyst for either of those events. Volatility will be the name of the game. And just a quick look at the SPX. What might the market be pricing in, or what is the market pricing in terms of implied volatility? We'll look at the SPX. Just going into this binary event as we might for an option play or for an earnings play. The implied volatility for the SPX, 22%. That's for Friday's expiration, which translates into a move of about 37 points in the SPX. What about the spiders? In the spiders, that would translate here into a similar type of move, 22% implied volatility. Notice that's a little bit higher for Friday, and I think in part because of the jobs report and the volatility that it might move the market. That's about a $3.8 move, almost $4 in the spiders or SPY. The same will be true in the other indices, Nasdaq. Just quickly look at it and see. We'll take that trade grid off and just look at the implied volatility. That's going to be for tomorrow. Implied volatility, 23%. And the implied move, 167 Nasdaq points. Of course, we'll see when that occurs, how the market is behaving pre-market. And that makes sense that today had its consolidation. We'll at least go back to a 1-minute chart to see that the market did indeed do a range consolidation after the bid up, melt up, or trend up on Wednesday's session. Today was a consolidation. Tomorrow could be a volatile event, and the catalyst could be the jobs report. Outside of the bigger picture, we had earnings today from Eli Lilly, and they reported their earnings, just not so much looking at what the earnings were at the end of the video here, but you can always take a look at what the analyst estimates, what the consensus, and of course what the actual numbers were here in Thinkorswim's news tab. So Eli Lilly had its earnings and is down on the session about 2.5%. ConocoPhillips had its earnings. The stock is down in today's session as well, down about 1.5%. And then Duke Energy had its earnings down about 1% in the close. Amgen is the only major company in the S&P 100 to report earnings, and we'll take a quick look at it just on the daily chart. We'll go here to a 1 minute. And you can always take a look at what the earnings and the after hours plays are. So after hours, we'll pull this off onto the 1 minute chart. We'll go into our equity tab. When I see the extended hours, and for that stock, it is a little bit unchanged. Nothing going on there at the moment. Of course, that could change after the video and, of course, before pre-market on Friday. Coming up is Berkshire Hathaway. And the next week will be AIG, Emerson, Disney, and then other stocks. And the main S&P will be leading earnings, but not as much as we've had the last couple of weeks. So we can take a little sigh of relief on the earnings front and pay more attention to the economic data, the jobs report, inflation data, and everything else that hits the market Friday into next week. As always, be careful and safe. And this is Corey Rosenblum with tonight's video update for TheoTrade for August the 4th, 2022.